I'm Ed Kelly. Welcome to another edition of CEO Angles. At this time of the year, insurance executives are meeting with their reinsurers and brokers to get a reading of their upcoming 1/1 reinsurance renewal. It has downstream impact on risk retention levels, insurance pricing, and more. With COVID-19 restricting face-to-face discussions, we've invited two well-respected leaders in the reinsurance space to share their thoughts on the state of the market. I'm happy to welcome a longtime friend to AAIS, Frank Nutter, President of the Reinsurance Association of America, and David Priebe, Chairman of Guy Carpenter, the leading reinsurance broker. Gentlemen, welcome.
Thanks, Ed.
Thank you.
David, let's start with you. 2020 has more than its fair share of crises. We've had the pandemic, civil unrest, hurricanes, and wildfires. What impact are these events having on the insurance and reinsurance losses?
Well, Ed, you're right. It has been quite the year. And quite frankly, even prior to COVID, the industry was already facing a range of challenges. The widespread impact of the global lockdown added to this challenging market and created the potential for even greater volatility. For an industry that's been founded on the principles of diversification, we're now grappling with the implications of this first systemic insurance loss. You know, in trying to assess this loss potential of unprecedented scope, more than one sort of educated guess put the potential claims to develop in excess of 100 billion. Along with financial volatility, it really did wreak havoc on the asset side of the balance sheet, followed by the lockup of the retrocessional market and the widespread trapping of alternative capital. As a result of these sort of initial responses at mid-year, the renewals were really the epicenter of the market uncertainty, and we all experienced the strain that created. Pricing was impacted, capacity tightened. Guy Carpenter's global property catastrophe index increased by 6.2%. After incorporating the mid-year placements, the challenging Florida renewals, loss-affected Japanese pricing, and really a cautious market induced by COVID-19. But despite this environment, all covers were placed and sufficient capacity was made available. Some areas of that uncertainty are diminishing. Primary rates are increasing and new capital is entering the market, so the news isn't all that bad. The need for our primary carriers to continue to generate underwriting returns in this low interest paradigm has created tightening of capacity in certain classes of business and increases in rate across the board. At March, the all lines, all geography pricing index has now shown price increases 12 quarters in a row. And underlying insurance profitability, as you know, is critical for sustaining insurance in the reinsurance marketplace. The good news is that assets are coming back. So we hit a new high in August, although we're now seeing a lot of volatility come back into the market due to the uncertainty around the economy and the elections. And probably the more important point, regard to the direct COVID losses, a lot of the market commentators are reassessing downward their view of the potential impact of this loss, particularly in the domain of property business interruption. And we're sort of fortunate we've had some positive court rulings, but still a lot still needs to be determined. It is going to still have an impact as we sort of look forward.
Thank you, David. Frank, the COVID-19, as David mentioned, continues to have an impact on the U.S. economy and also the world economy. What are the challenges you believe the industry faces as a result?
Yeah, it's your question really suggests the answer, and that is that the insurance industry's business is really dependent upon gross domestic product and the recovery in the economy. Businesses back up and running, people employed, homes sold and stocked with features that are insurable kinds of features. People back on the road with their cars. The reality is the biggest challenge for the industry is somewhat out of its control in the sense of an economic recovery. But the biggest challenge, I think, is really how can the insurance sector and the reinsurance sector be relevant as part of that recovery and help businesses and government deal with a pandemic of this nature.
We mentioned the government. Frank, is the government doing enough?
Yeah, I think the answer I would give is the industry sector feels like it's not doing as much as it could be, but not so much about what stimulus packages or the amount of funds that have been pumped into the economy or the role the Federal Reserve has played with all of this, but whether or not going forward the industry really is in a position to provide coverage for pandemic viruses or something that we have seen. So the answer is the industry feels like it needs to have some sort of a partnership with government, particularly the federal government, that would provide coverage, a coverage product that can be marketed. To David Priebe's credit and that of Guy Carpenter, they've taken a leadership role together with Marsh in exploring that role that the government ought to play. And while there's several proposals out there with differing roles for the federal government or differing degrees of risk retention, the industry feels like it has to have a partnership with government, a risk-bearing partnership with government going forward.
Great. So David, how will these insured losses and these economic issues impact the upcoming renewal season?
You know, as I said earlier, continued underlying price improvement will likely continue in order to address prior loss trends, lower interest rates, higher costs of capital. This added to the uncertainty related to this pandemic and, as Frank said, the economic impact will likely result in continued market firming across all lines. It's going to be an extremely challenging market, probably the likes of which I haven't seen in 20 years. Maybe even my entire career at 40 years. That said, we've had lots of conversations with a number of our market and carrier partners, and we feel pretty confident that we're going to have a very orderly market. Underwriters will be assessing each of our clients' portfolios based on its own construct and its track record. So as challenging as it's going to be, we're confident that the market will respond and continue to provide the needed capacity that our insurance clients require.
Great. Well, I think we would all agree that this is an unusual election year. It seems to get more unusual every day. But what impact could the elections have on the insurance and reinsurance market? And what are the major policy issues that reinsurance executives are concerned about heading into 2021? Frank, what do you think?
Yeah, Ed, I'm going to repeat the thing that David and I both comment on before I comment on some others, and that is the election, the impact that it would have on the stimulus that's being pumped into the economy by the federal government in particular. That would be the biggest consequence of the election as the Congress and the administration are currently structured. Certainly if there's a change in the administration and or if there's a change in the Senate in particular, so you have a Democratic administration and a Democratic Senate, we could see a lot of different emphasis, if you will, on issues. We would expect to see some tax law changes that could affect the industry. We would expect a new Congress to focus more on climate change, which obviously affects the industry because of the extreme events that are the consequences of climate change. The industry largely feels like the subject of a business interruption partnership with the federal government is related to the pandemic is going to have to carry over to the next Congress. That doesn't seem like that's going to happen in this Congress. Curiously, the question would be whether or not there are other things that the Congress could be doing to help stimulate insurance growth. And one of those is cannabis, in that there is a conflict between federal and state law about the legality of cannabis businesses. We had hoped and still hope to get that resolved in this Congress, but that may carry over as well with an emphasis on resolving that conflict in the law. So there are a number of issues, but most of that is dependent upon whether or not it's a continuation of the current dynamic of a Republican Senate, a Democratic House, and a Republican administration, or if we see flips and all that, it will change the priorities going forward.
Great. And David, would you agree with that?
I totally agree with Frank. And there are a lot of important issues that are facing our country. And one thing that I think really needs to sort of be addressed as a top priority, and I think there's growing support across both sides of the house, is really addressing the pandemic situation on a go forward scenario. So I think we need to make sure that we put in place something that's prepared and able to respond to should there be another pandemic. You know, one thing we saw from this last pandemic, we weren't prepared.
Right.
And we firmly believe the insurance community can have a very positive role in helping to create a system and a mechanism to ensure American businesses don't suffer the same plight that they did this time, that we can provide the necessary funding and resources to enable them to continue should another pandemic happen, and really build more resiliency and risk mitigation. So I've been really encouraged by the dialogue that's taken place with carriers, with customers, and members in Washington, and some really thoughtful concepts and ideas have emerged. There are 5 or 6 plans right now being debated or will be debated in the coming months. So hopefully that could be one of the top priorities that we act on post this election.
Great. Well, those comments are pretty encouraging, so thank you for that. Let's touch on technology. As you may know, AAIS has been heavily involved with the use of deploying modern technologies like machine learning, artificial intelligence that allows us to do policy comparisons for our members. We've also launched OpenIDL, our distributed ledger technology, to streamline regulatory reporting. But Frank and David, what are the technologies you believe hold the most promise for our industry? Frank, what do you think?
Yeah, I'll start. I do think David is probably in a better position to talk about the value of the technology in terms of business operations. I would commend the AAIS for its leadership in this area. That's really, really quite commendable. Let me flip the question a little bit, and that is that we see an economy, a business economy focused on technology. The challenge for our industry will be, how do we become part of that shift in the nature of the economy in terms of technology, artificial intelligence, a gig economy, that the industry needs to be relevant, if you will, in all that, not just for the internal operations, as you've referenced, but for the change that's going on in our society that the industry needs to be part of and promote, if you will, for its business viability and certainly its relevance.
Great. And David?
Yeah, just what Frank just said is really important. We've sort of moved to an environment where I think in the S&P 500, probably 90% of the value in that is driven by intangible assets. So it's really important that the industry does start addressing the needs and build solutions to support the sort of non-physical nature of values. But Ed, sort of talking about more technology and how it can play out in terms of the impact on the insurance community, you know, we're really living in an exciting time. We're in a cusp of a major technology revolution that I think will change everything. You know, artificial intelligence could transform the industry just like electricity transformed things. So it's really exciting. You know, it's technology is still maturing, and insurers need to remember that the lessons of the .com era. But our view is that the segments of the traditional insurance industry will adopt these new technologies, probably at a different time, a different rate. One area that we think, you know, poses some really good value is sort of in narrow artificial intelligence, NAI, which holds a lot of promise for the industry. It's truly general and transformative technology that is AI. Narrow AI is goal-oriented, focus on single tasks, facial recognition, voice recognition, visual recognition, and so, you know, we think it could sort of transform many components of the insurance value chain. And some of those areas are, you know, that it can impact our product development and pricing through telematics and real behavior pricing, sensors, real-time product on-demand products, personal insurance, buying experiences, sort of created an Amazon-like recommender engines to custom tailor recommendations. I sort of down the list: risk assessment, underwriting, using big data and predictive analytics, all the things, a lot of things your firm is doing. And billing, sales, distribution, customer engagement. It's really exciting. What is going to happen, and it's going to touch virtually every component of the insurance value chain. And I think we're really at an exciting stage in our industry to further develop, and really give a positive impact. I think we can make a really tremendous impact across the economy.
Well, thank you, David. Yes, I would agree. We do live in some exciting times in our industry. Frank, if you could summarize your thoughts on the health and strength of the U.S. insurance market as we're heading into 2021.
Ed, the word that comes to mind is robust. The capital position of the insurance and certainly the reinsurance sector is very robust and sound. I do think that, as David suggests, that there are thought leadership companies and organizations, including AAIS, that are looking at ways to make certain that this industry is relevant in this new economy as well. The notable thing in the reinsurance sector is the introduction of a significant amount of new capital. That's always a sign that the industry is attracting investors and that there are new opportunities. So together with the traditional reinsurance capital base and the alternative capital, the industry is really pretty robust in its position.
Great. And David, how are you feeling about the market?
I share Frank's sentiments. Overall, the financial strength of the market is very strong. Capital's only come slightly down on a year-on-year basis, but the really positive side, new companies are entering the market. We see at least 3 to 5 new companies on the path to launching by year end. And more importantly, existing companies have raised capital to enable them to grow in what they see to be a very strong market. So we don't really see an overall capacity issue here. It's going to be more of a function of capital deployment and portfolio construct at targeted terms and conditions. But we feel pretty positive about the state of the reinsurance market at the moment.
Great. Well, that seems to be a good place to end it. And gentlemen, thank you so much for your time and your insights. Very helpful, and our members appreciate it.
Our pleasure.
That's all we have for this edition of CEO Angles. If you missed the launch of AAIS Pulse, our new video news magazine, please check it out, our replays on the YouTube channel. Till next time.